let's have a quick look. Oh, well, there you go. What's gonna have a quick look at the price action, the news. Here's Mariano again. The technical difficulties. Mariano, you hear me, right?
Yes, perfect.
Okay, lovely. We'll just continue on without a blip. Let's start getting into the price action as we usually do. I'll share my screen and Mariano, feel free to comment on highlights. What stands out to you this week?
Awesome. We have seen a little bit of a flip again. We basically saw 2 weeks ago the Fed, which was the major decision, uh, basically just a Jackson, Powell speech, clearly indicating what was expected, what's going to happen next month in terms of the Fed rate cut. The market has kind of reacted in a sell the news by the rumors way. The stocks have recently hit all-time highs as well, and are in crypto and risk on have been slipping, even though gold is up only. It's making new all-time highs. So right now, negative on the week. You change to 24 hours, might be green, but not much. Solana is the only outperformer on the major side. Everything else is trading kind of weekly, very to be expected as Bitcoin is correcting. Nothing major, but it's worth taking note that it's kind of a sell the news event from the Fed lineup.
That makes sense. Want to look at fear and greed?
Yeah. Fear greed is very insightful right now. It's doing the same as the previous correction. We have
Yeah, it seems like Mariano's stream is
decorrelation from basically the sentiment.
All right. I'm gonna switch it to low data mode just so we can continue the show. There, maybe that should be better. Ah, we lost Mariano again. I'll give it a few seconds. Maybe he'll rejoin. If not, we'll just continue the show and go straight into the interview part, which might be as well, because in the end, that's what people come for, I tend to think. Although it is nice to get a few quick updates as well. So,
I'm back. Sorry, guys. Can you guys hear me well?
yeah, your audio is great.
Awesome. Sorry, guys. So basically, I was just going over like how fear and greed is decorrelating right now, and this is a buying opportunity. Basically, like looking at price hasn't fallen off that much from all-time highs, but fear and greed is basically reset. It has further room to go. Maybe if we revisit the mid 100K to 110K range, like 105 to maybe touching 100,000, it's going to turn fearful. That's something to note. But as of right now, it's already indicating a good, asymmetry from the investor side, buying the blood narrative, basically.
Lovely. Sounds good. All right. Let's have a closer look at ETFs.
So ETFs have been quite surprisingly bullish on Ether, despite downside at the last week of the month, which was a positive $1 billion inflow for ETH, and not too diverse from the Bitcoin ETF net flow, which was at 440 mil last week. But if you look and you zoom out at the monthly, which was quite surprising, was that ETH brought in $3.8 billion of net flows into ETFs, while Bitcoin had a negative net flow of 750 mil. That's significant. That's the bigger picture for August. Even though Bitcoin was down, ETH was up around 18%. Bitcoin was down around 7%. So that's something to note, that ETH is outperforming with a fundamental reason, which is a flows-driven ETF, which can be attributed to the front running from the ATs, which is something that we analyze on. It's very important to keep an eye on. Can you switch to the ATs? Yeah, basically right now, BMNR, which is BitMine, led by JP Morgan equity strategist Tom Lee, now also co-founder and head of research at Fundstrat, which is both a fund and research provider, has become quickly, around 2 months, the number one ETH digital asset treasury company, which stands for DAT. And he's not stopping. He's still 31% away from his target, according to Ethereum Reserve, strategic reserve.xyz. And if you sum both the ETFs and the digital asset treasury companies' reserves, that is almost at 10% of Ethereum's supply. That goes to show how ETH has been the narrative at the institutional level right now.
Wow, that is intense. Okay. News items, highlights.
News items. We saw a major news event this week from the staking side. So ETHZilla, continuing from the standpoint, ETHZilla is a newer DAT, which just announced that they're planning to deploy 100 mil into EtherFi's restaking solution, which is quite exciting. It's something that was bound to happen sometime soon. And I think increasingly they're going to have to go down the risk curve. Of course, the further you go, the more dangerous it gets in terms of the risk itself they're putting on. But at the same time, I think it's a plus for the market. We're already seeing these moves happening, not just from DATs, but ETFs, which we're going to talk about further. The staking ETFs have been evolving quickly.
Yep. Further news. Let's see. Oh,
yeah, GDP. We had GDP coming on chain, which is quite exciting in terms of, the US having its stamp of approval. They're basically saying we trust blockchains as they do this. It's specifically the Department of Commerce that lined up this with Chainlink and Pyth, the Solana largest oracle. They're going to deploy into Bitcoin, Ethereum, Solana, Tron, Stellar, Avalanche, Arbitrum, One, Polygon POS, and Optimism. That's a mouthful. Yes. I'm pretty sure, they're not going to go after these blockchains in terms of how the SEC was going after it, giving out a bunch of subpoenas and scaring off the market like they did with Solana, etc. So that's a general positive market environment going forward. Governments putting data on chain is very exciting. What do you guys think?
Yeah, it's usually it goes with the recent trend, right? The total pivot from the U.S. government on just about everything crypto, and it's a complete 180. So, talking about government, maybe we should touch on World Liberty Financial.
Yeah, I saw this launch in almost the weekend, right? I think I was like the start of the week, but at the end of the day, this launched at 30 cents, which amounted to around $30 billion FTV, which is kind of insane if you think about the first day of a launch of a token goes all the way that high. Of course, it's pegged to the it's actually showing 33 cents as an all-time high on CoinGecko, which is 33 billion. that would be, if I'm not mistaken, within, let's see, the top. That would be the top one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That would be like top 12 crypto asset by market cap and first day, which is insane. Since then, it's faded. It's almost 50. Yeah, it's basically 50% from all-time highs. This goes to show the bid of the market. It's not speculative anymore. It's not buying Trump as it was previously in the start of the year. I'm not too convinced that this is a either bearish or bullish sign. I'm not seeing much interest in terms of fundamental investing here. So just crazy volumes spiking all over the place. It's generally speaking, Solana was chosen again to be the blockchain of choice here as a launch, which also coincided with a crazy launch that happened last week, which was Yeezy, basically a meme coin that was created in there to 3 billion, then faded. So I'm not too sure if this is a bullish or bearish sign for the overall market, but for Solana, I see it as a general positive due to the nature of being chosen as these new tokens home based.
Yeah, we're
Right.
talking about YZY right now, like Yeezy.
Yeah. Just touching on it, that it was chosen to be launched on Solana, and nothing happened in terms of security or just downtime, which is but the faded price action is again retail getting wrecked. It's a trend that we've seen over and over again. It's just gambling happening. I think speculation. This project is nearly vaporware in terms of what it provides as a front. It's just launched as a meme coin. It claims it's going to have a card, but nothing to see here as of right now. It's just Kanye doing some money, making some. He does really well.
Kanye doing Kanye. All right.
Yeah.
Interesting. All right. With that out of the way, I think we're all updated on last week's news and highlights. So let's get the show properly on the road. So, to everyone joining, welcome to a new Market Cap episode. Market Cap is where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. I'm your host and moderator, Stefano, Director Institutional Services at Alea Research. With me, I have Mariano, our analyst specialized in valuation and market reports, and we're joined by Kean Gilbert, Head of Institutional Relations at Lido Ecosystem Foundation. Kean, welcome on the show. How are you?
I'm good. Thanks so much for having me.
Yeah, lovely. It's an honor to have you with us, and very excited to get into this conversation. Before we properly get into Lido Institutional itself, maybe share us a little bit more about you and your background and how you ended up at Lido.
Sure, yeah. So I think I'm in crypto now around 9 years. Definitely getting on in terms of crypto years. But like I started my career in Deloitte doing like financial services, capital market consulting on crypto. I was there for around 1 year. After Deloitte, I went into Consensus. So I was there for around 5.5 years. Mainly worked on like MetaMask Institutional, Infura, staking, tokenization. Yeah, you name it. I probably worked on it for a short period of time. After Consensus, I joined a startup doing like portfolio and risk management for crypto funds. And I left that company to join Lido Ecosystem Foundation, where I'm currently the head of institutional relations and I lead Lido Institutional. So really our mandate as a team is to help grow adoption of Lido staked ETH or stETH among institutional clients. So by that, I mean different crypto funds, asset managers, hedge funds, like really anyone who has a significant amount of ETH. And we obviously encourage them to stake it with Lido for the added benefits of liquidity and capital efficiency.
That makes sense. I think it would be interesting to touch a little bit more about like how Lido Institutional came about and placing it a little bit in the wider context of how Lido has evolved since its inception. Um, yeah, what have been the biggest developments in Lido to date? It's especially highlighting this shift towards institutions and the work that you're specifically focused on.
Sure. So like Lido DAO and I suppose the protocol itself, I believe, launched in December 2020. And the whole purpose of Lido and I suppose liquid staking as a whole was to kind of address three issues. The first was to effectively remove that barrier that was created with native staking. So having to stake 32 ETH, that was a significant issue for a lot of people, especially if you didn't have 32 ETH, let alone the cost of that. The second big issue that Lido was trying to address was liquidity in DeFi. The third point, and I think this is one of the most critical, is to make sure that Ethereum remained decentralized. It was always a case of making sure that nothing was staked to one large node operator. And it was always about making Ethereum and staking as decentralized as possible. So for context, and this kind of comes up quite a lot in conversation, is that like Lido has, 30% market share and there's a centralization risk. In reality, that's not true. Like Lido is a middleware, nothing is actually staked with Lido. So for example, if you were to go onto the website, you take your ETH, you stake it with Lido, and in return, you're given stETH in return. So you can effectively think of that as a certificate of deposit. And what that basically represents is the ETH you've just staked and the staking rewards that is being generated. But what's effectively happening behind the scenes, which is quite cool, is that it's being distributed to over 800 different node operators. So that's a mix of between kind of professional node operators, or the curated set, as we would call it. So that would be the likes of kind of the Figments of the world, Chorus One, P2P. And then on the other side of that, you have a much more kind of solo staker, community staking module, where again, the whole focus is on making Ethereum as decentralized as possible. And I suppose this kind of leads on to the second point of your question: where has the institutional angle come from? And I think it's really clear to note that like Lido has been incredibly successful at a retail level. And from a selfish point of view, that retail kind of success has kind of made my job a lot easier, because you're effectively able to show success. Like I think Lido's TVL right now is around 40 billion. That probably equates to around 9.5 million ETH that's been staked. So effectively what you've done there is you've proven the use case, it's battle tested, and ultimately you're showing liquidity. So now when I go and speak to these big institutions, they effectively care about two things: how much they can sell and how long it takes to sell. So having that kind of, I suppose, moat of liquidity is terrific. And there's very few kind of competitors that can compete with that.
That's terrific. And yeah, like, I mean, battle tested is an understatement. I think everyone is familiar with Lido and your feats of arms, let's say, and yeah, firmly established. So I understand that might facilitate your work on the institutional end as well. Um, Mariano, maybe you want to take the next question.
Yeah, I think he briefly touched on the point that I wanted to go over,
Yeah.
which is the centralization part. We covered a chart which is really interesting, which shows how Lido's centralization has been de-risking over time.
Yeah, I'll share it. Please continue.
So over time, we've seen Lido move away from a 33% finality threshold, which that basically means that Lido as a pool, as Kean explained, it's not a single player, it's a pool with multiple players, more than, as of date, hundreds of players, has moved away from 33%, which would be where the network would technically be at risk of finality issues. If Lido went rogue or did something wrong, that could potentially have, led to a downturn, basically an outage or something of the network. That has never happened Lido has never been over 33%, and it's been de-risked since then. And a good point about this is that the overall ETH stake in the market has risen. It's not bad thing that Lido's dominance has gone down for Lido token holders, for example, because the overall pie is still growing. It's still a grow the pie market. So it's just really interesting to see how that centralization, which was a very big discussion back then, has since faded, and we're way below the risk threshold.
Yeah, for sure. And I think, well, Kean, you briefly touched on this already, but yeah, like it's been raised, like Mariano said in this critic in the past of decentralization. But how is Lido further addressing this, and what does it mean for Ethereum's resilience?
Yeah, like again, it's kind of one of those headline um, kind of pieces where like, okay, Lido's this big scary beast that holds a significant or an unduly amount of influence. But I think again, people kind of forget that look, it's not in our incentives to go against Ethereum. It's the exact opposite. Like you kind of touched on before, it's more about growing the pie and making sure Ethereum is incredibly successful. And I think there's very few other protocols that say they're doing as much as Lido to make Ethereum more decentralized. Um, like there is a mix, I would say. Like if you go more the crypto native, I would say the decentralized element comes up a lot more in conversation, which is terrific. Like that's obviously how Ethereum got started. If you have more institutional conversations, I would say it comes up less. Like institutions tend to want a little bit more centralization. And it's not because they're going against the ethos of Ethereum, it's just easier for them to manage risk. Like it's a lot easier just to use one centralized exchange if they offer an OTC desk, or they may offer custody service, or they may offer staking. It's a lot easier just go and manage one vendor compared to trying to onboard 800 vendors. And this has kind of been some feedback we've gotten over the past year that, okay, Lido Core is terrific, decentralizing Ethereum, terrific liquidity. But then on the other side of that, they want a little bit more customization and control. And this, I'm sure we'll touch on in a moment, kind of leads into the new product with Lido V3 and stVaults, where we're offering to address some of those customization concerns or customization demands.
Yeah, the stVaults. Let's talk about that. We had another question lined up actually, but since you bring it up, it could be interesting to front run a little bit and touch on this question. So yeah, as you mentioned, right? This is a new product that addresses a lot of these former discussed concerns. Um, there's also a recent pivot, as we've seen with the new segment from U.S. regulators on DeFi. So, do you think we can expect to see another round of innovation coming from some of the giants of the industry, like Lido? And is this basically what that solution is from Lido at this moment?
Yeah, so definitely like Lido V3, stVaults, it's a huge focus for all the contributors, making sure that we can get that launched as quickly as possible. Like effectively what we're trying to address is the customization element. So to give you kind of example, if you're like an American ETF issuer or asset manager and you want to add staking to an ETF, like the chances are you're going to use one custodian, you're going to use one node operator. So in the current setup with Lido Core, that's not really feasible if that's one of your hardcore kind of requirements. What we're trying to do now is kind of add an additional tool in the toolbox for me to go and speak to these asset managers and issuers. And Lido V3 and stVaults kind of addresses those requirements. So with stVaults, you'll be able to choose the custodian that manages the vault. So let's say a BitGo or an Anchorage, for example. Then above that, you're able to choose the node operator that you want to work with. So let's say a Figment, Kiln, P2P, you can choose. And then the final part, which is quite cool, is you can decide if and when you want to mint stETH. So in that kind of ETF example, you could potentially have 100% natively staked ETH ETF. And then when a request to sell your shares in that ETF comes in, you could mint stETH and sell it OTC. So effectively, you're meeting the liquidity requirements for that product. because again, a lot of feedback we've gotten is that like a 50% staked ETF is okay, it's acceptable, but obviously you're halving the yield. So if we say the yield right now is around 3%, you're only getting 1.5%. So with liquid staking and stVaults, you're effectively able to operate at 100% stake level and then benefit from the steep liquidity in parallel.
Okay, that makes sense. And you mentioned conversations with these parties. I'm guessing this is a huge part of your work, and maybe the stake vaults solution came out of these ongoing conversations with institutions. Am I imagining that right? Maybe you can tell us a little bit more without giving away any secrets.
Yeah.
But yeah, like how does that process go?
No, you're absolutely correct. Like a big part of our job is speaking to these institutions that tend to be heavily regulated. So, like, I think there's probably a broad consensus in the market that the next big wave of growth for Ethereum is going to be institutional driven, and they just operate with different requirements. That really is not to say that Lido Core is not fit for purpose. Of course it is. It just depends on the geography that you're operating in. So, for example, in Europe, like staking and ETPs has been around for quite a long period of time. So these European products already have staking in them, but they tend to be only at a 50% stake level. Again, from a European perspective, like Lido Core and stETH has been approved by kind of BaFin and FINMA. So like I would be quite confident that you would eventually see like a Lido staked ETP in Europe, because again, regulation is clearer, people know the rules of the game. And ultimately, if you're an issuer, it's a far more attractive product to have something that's operating at 50% or 100% compared to 50%. Whereas in the case of America, the conversations are quite different because the rules of the game are still being outlined. Like obviously recently SEC came out and said like liquid staking doesn't fall under security regulation, which is terrific. So there's clarity there. But the big thing that ETF issuers will have to address is that liquidity piece. So again, back to kind of steep step to liquidity there, the goal would be to always kind of move it from 50% staked right up to 100% staked. And a lot of the conversations we're having with ETF issuers over there, again, is around kind of customization and what they can get comfortable with. So this idea of, okay, they're already onboarded with, say, an Anchorage. Okay, Anchorage can custody the vault. Okay, they have an existing relationship with Figment. They have SLAs in place. They have insurance. They've probably been using them internally in some capacity. Now let's kind of marry those two worlds together with stVaults. Okay, the full stack for an ETF issuer can, I suppose, fall under stVault, and you can choose what party you want to work with.
That makes sense. And it's very interesting that geographic dynamic which you introduce, which adds an extra layer to all these conversations that you're having with different parties. Maybe it's a little bit of top of mind because KBW and token are coming up. Wondering, curious, any insights or patterns you spot, like similarly to what you addressed for Europe and the US, to maybe APAC and Asia in general?
That's a good question. So,
I went
yeah,
on
like
here. I'll admit that.
no, it's good. Like even Europe is so different. Like if you think about it, even from a currency perspective, like in Europe, you have the British pound, Swiss francs, obviously the euro, like different regulators. I think there's 28 different exchanges in Europe. Everyone kind of has different rules to some degree. In Asia, again, it's quite different. Like if you compare, say, Singapore to Hong Kong, as people, they're quite different, and as kind of regulators, they're quite different. So like HKMA has obviously been quite ambitious in the work they're doing. I would say Singapore has been always kind of a little bit more risk adverse. I would say Singapore probably happy with kind of 3-4% a year annual, whereas maybe the Hong Kong strategy might be the 10x home run. So again, there's such a divergence between these different geographies, depending on, again, the asset managers that you speak to, the strategies that they have deployed. But at the end of the day, like the American market, I think is 8, probably 10 times the size of the European market. So effectively the money, or like what kind of I do and what others do, is they'll kind of follow the money. And given that the US market is so big, like we're just waiting for that to unlock.
Okay, That makes a lot of sense. Switching gears a little bit to another product of yours, maybe we can talk a little bit about Lido Earn, which just launched. It could be interesting to touch on that as well. Um, yeah, so it launched with two inaugural vaults, the GG Vault and automated. Wow, I'm sorry, the decentralized validator vault. I'll pull up the screen, but yeah, basically you expanded your product suite with by launching Earn yesterday, September 3rd. And you already attracted 100 million in TVL. So congrats on that. What's the outlook for the capacity of these vaults before the yields compress? And
Um,
who's the target audience of this product?
So yeah, you're correct. Earn got launched yesterday, I believe, already at 100 million TVL, which is a kind of real testament to the team that worked behind it. Like it is a huge success already. Um, like really, like these vaults were kind of designed to scale. And like to your point around kind of yield or fee compression, like they're just going to gradually compress over time. But the whole thing that's quite important to Lido and what we do is like the outlook for these vaults should be sustainable growth. Like eventually what's going to happen, and you mentioned it there, there's only kind of two vaults. Like there will be more strategies that come online, there will be more vaults that come online. So effectively what we're trying to again offer um, to potential users is diversity of choice. So even though there may be some fee compression in the beginning, and to really stress this, it will be gradual, different strategies will come online and offer more choice to kind of users. And then on like your second point around like who are these vaults designed for, I kind of put it in two categories. You have kind of category one, which would be more crypto native, and then the second would be more on the institutional side. On the crypto native side, I definitely think they're probably looking to boost their steep yield, which again probably makes more sense if they're crypto native, probably a little bit more comfortable to take on more risk. Um, so I put that in kind of category one. And then category two for institutions, they tend to want to operate on a much more curated structure. They want to manage or they want to have access to, I suppose, a risk managed DeFi offering, and they don't want to build it themselves. So a strategy like Vaults kind of offers a out of the box or off the shelf solution where we're presenting these strategies to different institutions and they can pick the one that's, I suppose, most aligned with their strategy or what they want to deploy from a capital perspective.
It's interesting to
Yeah, one of
see.
the
Oh, Mariano, please do go ahead.
yeah along that thesis that these institutions are going to come and want these all-in-one wrapped fund management solutions. Is there also an interest from in terms of staking and risk curve more broadly from ETF issuers and DATs coming on chain and doing, specifically to start with native vanilla staking? How is that specifically on the ETF side, since we already have seen DAT step a little bit in the testing the waters a little bit with Zilla and EtherFi, more specifically on the ETFs front, which is of course more regulated, especially in the US. You expect staking infrastructure to go further development, to do further developments to meet their demands?
I would say on the ETF side specifically, it's very much native staking, liquid staking conversations. Like for them, they're ultimately, again, just trying to go from like a 50% staking ratio right up to 100%. Like if I'm honest, I would say like we're not really having a lot of looping conversations or using stETH as collateral conversations with like ETF issuers. Most of those conversations are happening with the DATs. And the main reason for that would be they can be a lot more aggressive in the strategies that they deploy. And that's, I suppose, ultimately where the DATs are going to find their market. like these DATs, how are they going to compete with a future ETH staking ETF is obviously by offering higher returns. So that could be a case of 20%, 30% liquid staked. Maybe they have a looping strategy, or maybe it's a case of they're going to deploy stETH into DeFi. So I think for the DATs, these vaults are going to be a lot more attractive because they tend to be a lot more educated and a lot more advanced. I would say the ETF issuers are kind of like level one. Let's just get native staking or liquid staking added to an ETF. And at the end of the day, an ETF is just a wrapper that traditional institutions are comfortable with. I think if you were to take some of these more creative vaults or looping strategies to ETFs, I just don't think the market is there yet. I think it's much more applicable to DATs because, again, the people that would invest in them or the people that operate these DATs tend to be a lot more educated or advanced when it comes to crypto strategies.
That makes a lot of sense. For me as a crypto native, I understand the value proposition of Lido and Lido Institutional very clearly. Taking a step back to put myself into the shoes of these large asset managers, they probably have looked at Lido like a DAO, like that doesn't have, too much central, like the patterns that TradFi does. But I think that a point that has significantly de-risked the procedures of the DAO and how the DAO is going to govern going forward has been dual governance, which has been on the forums for such a long time and has since gone live since July, if I'm not wrong. And that has enabled stETH holders to participate and influence the DAO decisions. It basically splits the power between them and Lido holders. The motivation is to remove the principal agent risk, where people who bear the protocol's execution risk had no say in governance, basically. So as this long-awaited proposal has been in production now for a few months, how has been the general feedback specifically on this large player like asset manager ETF/EAP side and key stakeholders likewise been?
So yeah, like at a high level, like dual governance has been really well received. Like you're absolutely correct. Like kind of a big part of my job is actually educating people that Lido is a DAO and like just getting them comfortable with this kind of on-chain world. It can be especially difficult if you're dealing with traditional institutions when they're like, why are you not just an LLC? But to your point around like dual governance, absolutely has been really, really well received. Like it's effectively given stakers like a true safeguard and node operators a lot more confidence that, okay, if governance decisions are put forward that may damage their business or put them at risk, they have a voice. I would say that, look, has dual governance been tested yet, or has it faced a crisis vote? No, it hasn't, but it does offer kind of a credible backstop that, okay, if something was ever to happen, it can be used. So like for institutions that want to kind of manage this risk, like it's been terrifically well received in that regard.
That's great to hear. What I was expecting. These institutions, they are coming on chain. That's inevitable. I'm really excited about that. And I said that Lido is very proactive to that movement, synchronizing all these major government improvements and protocol with Lido v3. I think we're headed in a very positive way. As a segue into that, how do you see large capital flows into these staking protocols affecting the DeFi ecosystem specifically? There's a lot of stETH in DeFi as collateral right now, around 3 million. I think we touched a little bit briefly around there during the conversation, but if you were to drill down, how would you see these major players coming in? Who's the profile to go down the risk curve to leave stETH as collateral? Will they leave it in DeFi? Will they leave it in CeFi, like centralized exchanges? What's the point of view from Lido Institutional?
Yeah, like it really depends on who you're speaking to and the strategy they have in education. like stETH is definitely becoming the benchmark of the crypto economy, and stETH has quickly become like core collateral in DeFi. Like it lets users earn staking yield while they're borrowing or lending against it. And that's really attractive compared to, say, using USDC as collateral or unstaked ETH. Like using an asset that's always generating an underlying 3% as collateral is terrific. It just makes a ton of sense. The other big part that kind of comes up a lot in conversation is like the upside around liquidity and capital efficiency. So again, these are two core requirements that institutions want to see. They want to know how much they can sell, how long it takes to sell, and ultimately just putting their money to work. I suppose like another point to probably touch on is the potential risks around doing that. So again, doing anything with leverage comes with its risks. But I would say a lot of the parties I deal with are using stETH as collateral through the likes of, say, like Fireblocks Off Exchange or Copper Clearloop, and they're doing that with centralized parties. So like OKX or Deribit, for example. I think the more crypto native, I suppose, strategies or asset managers, I think they would probably look at like stVaults. So it would basically help them manage their exposure, and then it would potentially reduce their risk if they're kind of using a node operator of their choice. But it presents like terrific opportunities. Using stETH as collateral is probably the most exciting part. Like the underlying 3%, as great as it is probably a little bit boring. It's how you use stETH, whether it's deployed in DeFi or centralized exchange, is the cool part, in my opinion.
It's I noticed this before, and Mariano pointed this out as well. You are very proactive with your suite of products, it seems like. And yeah, like we talked about that before. Surely that's coming out of your conversations with all these institutions, but it does seem like, okay, you have a spectrum of solutions for different parties on, let's say, almost like the sophistication curve, which is very interesting to see. I'm sorry, it's not really a question. It's just something I noticed, but do want to compliment you guys on that. Is that, you think, one of the ways that Lido is differentiating itself from its competitors beyond just the first mover advantage, right?
Like I would say, I could genuinely say that like Lido and the contributors, like they're incredibly passionate about what they do. And I think like success for any company or any DAO like really comes down to the people. And I can say kind of hand on heart, like I work with terrifically intelligent people who have a real passion for what they do. And I think that's kind of shown in the products that get launched. Like the second thing I would say is that like if you want to do something incredibly well, you have to focus on it. And what Lido does is Ethereum staking. We don't do anything else. So that effectively allows us to be hyper focused on Ethereum, what's happening in the market, what products need to come online. And that focus is really, I think, starting to pay off. I know the chart at the beginning around like, okay, there's less stake with Lido might not look appealing right now, but in the long term, like the foundation is being led. Like Lido is quite a big operation, and turning the ship can be slow sometimes. But when the ship starts moving, you know, I think that's where the real power comes in, because very few can compete with the depth of liquidity that we have, and the products now are becoming, I suppose, so diverse. Like you mentioned, it's going to appeal to a lot of different stakers on that kind of stack, whether it's people who may just want to simply stake, get their 3%, terrific, or a little bit more advanced where, okay, someone's looping their stETH 10 times. Again, there's a product for both.
Yeah, that's wonderful. Zooming out a little bit more, what are you maybe excited about as far as developments are going in general in the industry and in the markets? Yeah, what are you expecting for the rest of the year and maybe even 2026?
So for me specifically, European ETPs, I think there's a huge amount of opportunity there. I would say the market is basically flooded in Europe with these 50 to 60% stake products. And I think it would be quite cool if someone was to launch a 100% stake product. So that's one thing I'm really excited about. The second would be on the American side. So again, I think it's inevitable, probably pretty soon, you're going to see approval for a staking ETF. And I think America will probably have to go through a similar journey that Europe has gone through with these 50, 60% stake products. So I'm really excited about the idea of someone doing like a Lido staked ETH ETF. And then I suppose the third part is with the DATs, like given that they can be quite aggressive with the strategies that they can deploy, that's a terrific fit for like the vaults, the earn products that are being launched. And then, yeah, it just gives us an opportunity to start working with big players and getting them to stake a lot of ETH. Like I think the narrative for ETH is really improved. Like beginning of the year, I always felt like Ethereum wasn't getting a lot of love, but now over the past couple of months, things have really changed. So I'm quite hopeful as staking and ETFs get added, a couple of cool things that we're working on gets launched, like 2026 could be a really big year.
For sure. Yeah, it's been quite a flip. It's very interesting what has happened with ETH. Should we foresee any specific staked ETH DATs?
Potentially, that would be quite cool. I have conversations. I hope one day it will happen. Watch this space is probably all I can say.
Interesting. I'm fishing a little. Yeah. Interesting. Mariano, anything from you want to ask Kean before we potentially have to close it out?
I think we covered, yeah. Well, definitely.
Okay, and more. Okay, we looked at the market a little bit in a wider view, right? Looking forward, what you're excited about. Anything? I admit I was fishing a little bit, but are there any other initiatives and developments that are coming soon out of Lido and follow up to all these amazing initiatives that are already underway and have launched recently? What else can we look forward to at this moment?
Yeah, I think look, the big thing is really stVaults, and that will kind of operate at a foundational level. So like the idea that say Figment could have its own vault, Chorus One, P2P, or I don't know, the BlackRocks of the world or Fidelity could have their own vaults. Like I think that's going to be really cool. So this will be an opportunity now for us to kind of collaborate a lot more closely with node operator partners, and I suppose for them to kind of act as like the tip of the spear. So they can go and speak to ETF issuers, they can go and speak to DATs, and they can kind of work with us in a lot more of like a co-selling motion where, okay, native staking pretty much understood right now. A lot of institutions may not have the same depth of knowledge around liquid staking. So like for me, I'm really excited about collaborating a lot more closely with them. Like these node operators have been terrific partners with Lido in the sense that they were in the curated set and they're running nodes for Lido. But I would always say that they were doing kind of a back-end job, which is again terrific. And now this is a chance with stVaults to be a lot more front-end, collaborating with them a lot more closely and going to speak to clients together. So I think that will have a lot of impact when it goes to launch in November, where I think we'll see a lot more staking inflow once stVaults launches. Because again, we're targeting a market where they had a higher demand for customization. So these institutions tend to have a lot more ETH. It tends to be sticky. It's not like the retail side where they can kind of stake and unstake as they choose, or I should say sell their stETH for stables. So I think the next big wave of growth is definitely going to be institutional for Ethereum as a whole.
Would this place you in competition with other vault infra providers like Morpho, Euler, things like that? Or like how should we understand like how they're positioned relative to each other?
I wouldn't say like competitive in that sense. Like it could be a case of they could have their own vaults for Lido. Like at the end of the day, like stETH, like we talked about, is kind of the benchmark of the crypto economy. There's a huge amount of connectivity benefits with stETH, especially if you want to kind of get into restaking. So Reese taking an asset like stETH that's always generating an underlying 3% yield, which is great. But I definitely think it's more around growing the pie, not around competing with each other. I think you're always going to have multiple different strategies. And I've never kind of viewed others as competitors. We're all trying to make, I suppose, Ethereum great, for lack of a creative term.
Yeah.
But like, it's all about growing the pie at the end of the day. And more choice to investors is super important.
I see that. I appreciate that perspective and that outlook, that approach. Finally, if people want to learn more, where can they find more information about Lido Institutional, your offerings, and maybe you personally as well?
Sure. So if people want to learn more about Lido, so you can reach out on the website, so lido.fi/institutional. And then in terms of myself, so you can get me on X. So it's just Kean_Gilbert.
Lovely. Thank you, Kean, for this interesting conversation. There's definitely a lot of interesting things going on with Lido right now, that's for sure. I can't wait to see the launch in November, as you mentioned, and yeah, just see how everything's going to play out. It's an exciting time to be in this industry, that's for sure.
Jens, thanks so much for having me.
Absolutely.
Thank you, Ken.
All right. Also, thanks to everyone tuning in. Always a pleasure. If you enjoyed this, you can access more insights in the following ways. For in-depth reports, many of them publicly accessible, you can join our research platform. For protocol and market summaries and highlights, you can subscribe to our newsletter. And for daily news updates, you can join our Telegram channel. All the links are in the bio. And you can, of course, tune in next time. We're live every Thursday, 10 a.m. Eastern on X and YouTube. This was Market Cap, where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. See you on the next Market Cap.